Hello. Welcome to Promover Crypto. If you love cryptocurrency and NFT art, you're in the right place. After carefully observing developments in the crypto sphere, we are glad to announce that there has been a fundamental shift that is currently occurring in the cryptocurrency market. This is not a trivial occurrence. Rather, it is a fundamental shift that could herald one of the most exciting investment opportunities of our time. We can even say with a great deal of confidence that this could be the biggest event in 10 years. This is not hyperbole. If this shift occurs at the right time, it might dramatically affect your financial future for all time. This may ultimately provide you the financial freedom you deserve and seek if you play your cards right. But before looking into this, I wanted to share a special 30% discount code for our website's exclusive artwork in appreciation of you, our dear viewer. You can find it in the video description. People, this bull run is growing stronger like a cyclone, and it's going to exceed everyone's expectations. What we are currently witnessing in the markets is probably only the beginning of the bull market. People who are enthusiastic about cryptocurrencies and are willing to take on risk should be well into accumulating at this time. The wrong strategy here is to wait until the irrational mania at the peak of a bull market. Early entry into the development phase is ideal. The most money is produced during the initial stages. Naturally, doing so seems counterintuitive given that most of 2022 was spent with investors suffering losses of 90% or more. Not very long ago, Bitcoin was trading at $10,000. Without a question, the market still has a lot of money sitting on the sidelines. Many risk-averse investors are still in a state of collective shock over this rally's rapid growth. Because there are still so many jaded investors who are reluctant to hop on board this train, it has in some circles taken on the characteristics of a hated rally. There are good reasons to think that the current Bitcoin asset values in 2023 will likely be the last and greatest opportunity to profit from this current trend. While some may contend that the best time was last year, we respectfully disagree and believe that the present is as good a time as any. What happened the previous year doesn't really matter all that much. When these top cryptocurrencies are combined with this kind of positive market mood, it creates the warm waters required to support significant price increases. It's very clear that we are now in the stage of disbelief. When FTX collapsed, there was widespread disbelief in the potential of cryptocurrencies as investments that grew culturally entrenched. But it's important to remember that markets go through cycles, but the game's rules remain the same. Long-term success can only be achieved by buying low and selling high. The majority of investors wait for peak excitement to make a purchase. These times may appear to be the safest to many, but because so few investors can benefit at peak prices, they are in all actuality the riskiest times to buy. It is evident that the safest and historically most profitable moment to get in is when individuals are buying low, as they will be the ones selling to those who enter the market late in the cycle, when the parabolic growth has already begun to decrease. Although keeping up with the group gives the impression of security, it is always better to take some risks earlier. One of the most crucial indicators for approaching market cycles is the flow of money or global liquidity. Global cryptosphere liquidity crashed at the time of the FTX crisis in November 2022. This was the lowest point for Bitcoin. At this time, China also began reintroducing money into the wider global economy. A sizable sum of money has been injected into the global economy as China started to reopen. A few weeks later, Japan began making an insane amount of bond purchases. Even to this day, China keeps pumping money into the markets. Coincidentally, Bitcoin reached its bottom at the same time as the Chinese credit cycles have. Clearly, this might be the start of a new money cycle, and if so, Bitcoin might appreciate far more than it has in the past. There are some clear reasons why. The first is that the quantity of Bitcoin available on exchanges peaked at the time of the cryptocurrency crash in March 2020. Never again will there be that much Bitcoin available on exchanges. The quantity of Bitcoins available on exchanges has dropped from 3 million to approximately 2 million in just about 3 years. There will be a scheduled decrease in the supply of Bitcoin in a year. Think about that, resulting in another supply shock. The amount of Bitcoin that miners mine each day decreases as a result of the lower supply since miner rewards are decreased by half. Don't forget to include the involvement of traditional investors in this picture. BlackRock announced the opening of their Bitcoin fund in August 2022. Fidelity announced the launch of a Bitcoin fund for its 37 million individual traders in January of this year. If everything goes as planned, there will be a serious scarcity of Bitcoin in the future. Simply put, not everyone who wants it will be satisfied by it. Owning 0.1 BTC, not even a complete Bitcoin, will seem ludicrous in a few years. In 2022, there were more than 200 million cryptocurrency users globally, and some analysts think that number may have reached 300 million. But if the current acceptance trend keeps up, by 2025 there might be 1 billion users worldwide. Global cryptocurrency markets will see an increase of 700 million users over the next 2 to 3 years, but prices according to skeptics won't leap to unfathomable heights. If cryptocurrencies follow the same trajectory as the internet, there may be 1 billion users by 2025 and 3 billion by 2030. The use of cryptocurrency will spread into more facets of daily life. You might be wondering how any of this is relevant, though, considering that banks are failing and inflation is still a concern. In addition, it appears that we will experience the greatest recession in history, possibly even the long-awaited Great Depression. Here's the thing though, markets have been entirely detached from reality since the 2008 housing collapse. Money printing has completely changed the nature of global markets, but as this past week's data has shown, corporate earnings are still strong. This implies that forecasts of a severe recession could not be totally correct. As interest rates rise, there will probably be less lending and liquidity available for speculative investments. But think about this. The conduct of the global markets is not always consistent with your expectations. There will be doom and gloom according to many. Ironically, this reminds us of the 1920s, also known as the Roaring Twenties because they were a time of excessive extravagance and also a time of very high inflation. Since there was no FDIC at the time, we witnessed the failure of hundreds of banks. The stock market was unconcerned because it had just risen to record highs. All of this taking place years prior to the Great Depression of the 1930s. At the beginning of the 1920s, there were those who thought that the good times would end. They were right in the same way a broken clock is right 2 times a day. In doing so, they missed growth that lasted for over 10 years. Be an iconoclast, as the majority of shoppers only make purchases when they appear at ease. They're going to put off buying until after prices hit all-time highs, which, as you know, our clearly enlightened viewer, is also the riskiest time to do so. I want you to take your wife and kids out on a yacht and spend millions of dollars. We want you to accomplish that level of success. You should invest sensibly and with risk management in mind, because there is no assurance and we are not your financial advisors. Here are our 2 cents for what it's worth. The market high will come sometime in late 2024 or potentially early 2025, and the next bear market will result in a loss of 99%. With that in mind, this is our best prediction. As always, please remember to invest cautiously and to engage in further due diligence. Additionally, if you found the content helpful and would like to see more, please do like, share, and subscribe to our channel. Make sure to hit the notification bell so you don't miss our future upcoming content. Till next time, take care.